Well, President Trump's sweeping tariffs are causing turmoil today on Wall Street. The Dow plunges more than 1,600 points. The S&P and NASDAQ experienced the worst day in 5 years. So how should investors react to this news? Local financial professional Gregory Ricks from Gregory Ricks and Associates joins us now with the latest on the markets and tips for protecting your investments. So this really wasn't a surprise today after the tariff announcement yesterday. Everyone sees the headlines. The stocks go down after the tariff announcements, but what's the reason?
Well, there's a reset coming. We should expect more volatility. From our firm standpoint, we've been expecting this. We've had a 10% correction since 1929, 16 times. So this happens about every 5 to 6 years. So it's not a surprise. We've been expecting it and preparing for it.
So what's causing, when we're talking about the tariffs, what's the direct cause? Is that just the market reacting? It's just a factor out there?
It is uncertainty. The market doesn't know what's going on. This is not usual business in Washington. This is all new reset. The U.S. as a country is used to being taken advantage of by the rest of the world, and we've been helping everybody, so to speak. Well, there's a reset now, and the markets have to digest this. So part of that is selling, panic selling in making those adjustments.
What's a day like for you here today where there is such a big sell-off? I'm sure you took a lot of calls today from people saying, what should I do? How should we go? Yeah.
You're going to be very surprised. I just checked with my team before we came on the news, and I said, so have we gotten many calls? And they said, we haven't gotten any whatsoever. We had one review today, and the client was looking at their 401k and comparing to what we were doing buffers. Their 401k was off 8%. Our buffers were off 1%. As I said, we're prepared for this. Our clients prepared for this. We don't want our clients panicking, and that's where we really take into our process of thinking about how people react. This is more becoming an opportunity. So what we've got when you have a bear market, those don't happen that often, and it's an opportunity. Even rarer is a 30%, like, oh my gosh, could we get down 30%? I don't hope for it. I don't like that type of market, but if you do, it's a rare opportunity, and we've got the NASDAQ and small caps basically have moved to bear market territory. The rest of the market's kind of just around 10% off. So once again, these are opportunities that happen once in a while.
So you see it as a buying opportunity. Is it a buying opportunity now, or you need to wait a little longer?
I don't know that we're in a buying opportunity now, more time. But the thing is, we don't have to react. And if we don't buy and say we missed this downside, we're okay, because we are looking for the long term. And we know if we look at the market in 20-year periods, history tells us we're always fine. So some of your money needs to be allocated time so you can adjust to this. But we like buffers, and we like risk-off investing. And if you're taking income, to be invested in the market is why you don't want to be invested and taking income from your assets. You need to be more in risk-off money for distributing income. Your risk assets need to be allowed more time. So don't panic. Don't start selling. You should have been diversified. You can still do that in the future. And if you really want some help in not getting it, you know who to call.
Right. Yeah, there you go. Well, thanks so much for stopping by, and great tips there. And the bottom line is, you said it, don't panic despite the situation. Okay. Thanks so much for stopping by with the financial tips.